Hi, this is Mark Carrington from mybitcoinprofits.com. In this short video, I'm just going to walk through the steps that I follow when I'm screening for stock ideas. Focus today is Europe. So I'll step back a little bit, explain why I'm interested, what I look for, and then what the outcomes happen to be. First of all, let's start with why I'm interested. I'm going to cover it two angles. The chart I have in front of you is a US listed exchange traded fund which invests in European stocks. It's a Vanguard FTSE European ETF. The ticker is up here, VGK. This is a daily chart covering the last 12 months or so. I'll pull it back so it looks like the last 12 months. And basically what we've seen is we've seen price do this, and we've seen it find a bottom and bounce. Is it going to go all the way up there? Who knows? Why am I interested in Europe? I'm going to pull on the same chart. I'm going to do a comparison between Europe and the S&P 500. So it's a similar index of the top 500 American companies. And we can see here already, just year to date, there's a gap here of the US has gone plus 7% and Europe is down 10%. So I'm interested in filling this gap. And then if I then compress the chart over a time period, so what we'll do is I'll make it a weekly chart. So each bar is now a week. And we'll go from the 2012 lows, the 2012 lows, which was the height of the European debt crisis. And we've got a gap of Europe has gone plus 30%, there's zero at the bottom, plus 30% compared to plus 114. That's my basic premise in being interested in Europe, is thinking that they will be able to close some of the gaps. So two pieces of interest. One is the bounce, and two is the gap to the US. And if I summarize them in the chart, this is a chart, this is called a buy-sell chart. It has two components. Here on the left-hand side, it's got SPY, which is an ETF that tracks the S&P 500, so the US market, compared to VGK, which we've already talked about. And a buy-sell chart basically means when the chart is rising, as this one has been, the first stock is outperforming the second stock. We've already seen that on that chart. So what I'm really interested in these turnover points. I've had a fair go at investing in Europe then, and in investing in Europe then, and the question is this a turnover point here? Ideally, you want to look for a lower low here and invest at that point. So that's the sort of the comparison to the US market that makes me interested in looking in Europe. Now let's go to the tools that I'll use. I'll just tidy up here. Let's get rid of that. I'll leave the chart as a weekly chart. Now the tool I'm using is called tradingview.com. We'll see the name up here, tradingview.com. And what TradingView has got in it is got a really neat stock screener down here. I'll just click a button and it allows me to set up stock screens. I'll show you what those stock screens are. I use 3 for markets that are going up. So markets that have been beaten up and I'm expecting them to turn around. I look at 3 valuation metrics. This is the first one showing here. It's price to sales. So that's the market value of the Zoom. It's the market value of the company compared to its total revenues. I'm looking for an indicator that is below 1. We'll see here PS below 2. The second one I like to look for is a price to book valuation. So that's the value of the company compared to the book value of its assets. So I'm looking to a price to book below 1. And then the third metric I use is price earnings below 15. So when the price earnings, so the ratio of price to earnings per share is less than 15. And then the other part the tool provides is it allows me to pick markets. So at the moment I'm looking at markets in the European Union. It's the European Union market. and we started at price to sales. I'm going to start at price to sales because this is where I just happened to land, and it then gives me candidate stocks. It's given me 3 stocks here. It says 3 matches: Air France, Carrefour, BIC. These are all French companies, or Air France is a merger with KLM. And the one of the screen items I have in here is that I'm looking for a price that's made a new 1-month high. So we can see over here that this price here made a new 1-month high. This is a weekly chart, but so we can see clearly that price is higher than it's been for a period of time. So this shape I quite like. And then I will look for fundamental criteria. Let's just pick one more. Carrefour I ignored because I already have Carrefour. I bought it over then. It was showing signs of life, and the reality is it hasn't, but it's certainly shown that bounce. So it would be a candidate, but I didn't look at it again because I already have shares in Carrefour. Now this is a classic example of what sort of stock I'm looking for. I can actually draw this trend line right from the top, join in enough of the tops. This is a weekly bar. I'm looking for the tops. So I've got a trend line that run down here, and we've basically seen prices come up to that trend line and broken through it. So that makes it a candidate for a recovery. Now, of course, bear in mind that this recovery, this process has mirrored the bounce that we've seen in the whole of Europe. All the question is, has it? So what I'm going to do is I'm going to leave that chart there. I'll leave it as a weekly chart, and I now want to compare BIC to a European index. So the European index I'm going to use is it's an ETF traded in Amsterdam called Think European. The ticker is TEAT. I'm going to push it back. The TEAT hasn't been listed that long. And what really struck me about this chart is I'm holding TEAT, is that this chart has been running down all this time, and the European index has been tracking upwards, down, across, and downwards. But this move here was much bigger than this move up here, and the drift downwards was smaller than this drift downwards here. So that made the stock attractive to me. So there was the heart of my trade idea. Is I sold this European index. I'm moving away from indexes into specific stocks, and I bought BIC and Air France. And you'll see that Air France has actually outperformed that European index over the time period. Next part of the process is just to walk through the country. So we go European Union, we just go to Germany, and we'll see what there is. Price to book Carrefour pitches up as it's listed in Germany, and this is the other one that I actually like the look of, Telefonica. So it's pitched up on the price to sales, but I want to look at Telefonica in its own market, in the Spanish market. So if we go down here, I can just work through all the markets. I'm overexposed to Italy, so I don't want to invest anymore in Italy. Singapore, South Africa, South Korea, Spain. And there I'll see Telefonica pitching up. Let's take away this comparison to Europe. So it's got a huge gap to Europe, and we see that same shape that I like. Let's get rid of this. This is the X over here, and we can see that strong downtrend line here. And price it's had a go at breaking out then, and it's had a go at breaking out then, but it is clearly bottomed and broken out now. So I added in Telefonica to my list. So that's basically the process. A very quick summary: price to sales, price to book, and price earnings below 15, and then just work your way through the markets. You can do US markets, there's a whole range of market information. European Union, Germany. We could look at Italy. So Saipem's an Italian company. Telefonica is listed in Italy as well. Price to book really brings up any banks, but there aren't any banks at the moment because they haven't made new highs. And we'll see if anything have got any price earnings below 15, and Telefonica pitches up there with a price earnings ratio below 15. So the next thing I'll do is I'll just step across quickly and have a look at some of the fundamentals for each of these businesses. The one I have here is Societe BIC. What I'm looking for is, we've seen how the price is broken up. That's what I'm attracted in. This is 6 months worth of price. The first thing I'm going to look at is I'm going to look at dividend yield. Dividend yield is here at 4%. So as long as they can continue to operate the dividend yield, operate at that yield, it's a good enough investment from a pure yield point of view. I also will have a look at some of the statistical data, the financial data. The ones I want to look at particularly are margins, returns. So profit margin is 12%, operating margin is 19%. That's a perfectly solid consumer products company. Return on equity, return on assets is 9%, return on equity is 14%. That's a good return. And then the next important one I'm looking for is the debt to equity ratio. This business has a debt to equity ratio of 12%. A current ratio of 2%, 2.2% for consumer products. That is a remarkably high ratio. So that's a sort of a quick walkthrough of fundamentals. We'll go and have a quick look at see what Telefonica looks like, what its statistics look like. So remember, we bought this on a price to sales ratio. Remember, the price earnings ratio was low. The forward PE was less than 10. Profit margins 14%, so very similar margins to what BIC is operating at. Return on assets, return on equity 15%, very similar to what BIC was operating. And the debt to equity, I'm fully expecting debt to equity to be appreciably different here. This is the challenge for Telefonica. It is heavily indebted, 230% debt to equity. So that's the risk in the business, and that probably explains that chart more than anything else. Is this debt to equity is what's driving this chart downwards. I suspect also is that this business has a fair amount of exposure to, we'll go to profile, to Latin America. Provides mobile and fixed communication, provided primarily in the European Union and Latin America. So it'll be Latin America that is driving this performance as well. But this investment is all about, have I found the bottom, and will it rebound better than other stocks? Appreciate your time and happy trading.